It's that time of year again where we bring you the hottest ASX dividend stocks for 2026. Now, if you want to earn more income in 2026 whilst also seeing your stocks go up, then our team's selections are just the remedy for you. So get ready, because this is going to be big. As the brains trust behind Australia's leading government-accredited share trading education and market insight that is regularly called upon by major media outlets. We cut the noise to provide you insight into the stock market that actually works. I'm Dale Gillham, joined by senior analyst Janine Cox, Philip Tortevsky and Pedro Banales, and we are Wealth Within. Good evening, team. How are we?
Fantastic. And yourself? I'm
just so excited you actually let me get back on the desk. It's been like forever.
You're just jumping out of your shoes, aren't you?
No, I'm not. I'm scared of you.
Because I'm so close to you.
You're so like normally you're over there.
Come on, it's Christmas. We have to be
I'm going to watch what I'm saying,
got something
guys.
special for you.
You've always got something special for me. That's what worries me.
It's magic. You're under my spell. And that means that you have to wear this.
No, I don't.
Come on, just put it on.
No,
just
I don't.
once. I know you want
it's
to.
It's for Phil.
You're a secret
Phil was
Santa
complaining
lover.
earlier that he's losing some of his hair.
My wig might come off. All
right, you Scrooge. I'm going to put it on. Bah humbug.
All right, well, let's dive right in and discuss the dividend outlook heading into 2026. We'd like you to see a rise in yields, and will it be across the board or specific to certain sectors? Now, I've got to go back to you, Janine, but I'm being careful over here.
You don't know if you want to, do you? All right, then, fantastic. We've got some good ones for you here. Sectors driving change in the Australian market. Now, tech is actually at the top of the leaders board, so you can see the price to earnings up there quite high at the moment. Forecast growth, 22.8%. This is likely to be the area of the outperformers. Big tech stocks we're talking about here are going to be the opportunity, the ones that have the big cash flows. Healthcare, 14.8 times price to earnings, but forecast growth 17.3%. So looking good there for healthcare. We know that healthcare's being sold down significantly. A lot of the stocks, except for ResMed and Cochlear, are still holding up, but a lot of stocks like CSL and Ramsay, Sonic Healthcare were all down, bottoming out. Materials stocks, 34.2 price to earnings, but forecast growth is 16.1%, so still strong there on the materials stocks. We know that Rio's gone to a new all-time high. BHP's taken off. Fortescue's looking really strong. Industrials, 29.5. Is the price to earnings, and forecast growth of 17.6%. So some really good potential opportunities in those areas with good cash flows, likely to pay good yields in 2026, and just watch those payout ratios.
Gotcha, because this is what they're expecting their price to earnings ratio to increase next year. Not necessarily the dividend itself increasing by that
Well,
much.
those metrics will indicate that those companies are quite strong.
Gotcha, and likely to increase
the
dividend.
Pay and potentially increase dividends.
Okay, get good growth, get good dividend. No problems at all. I've got it now. Now, for investors looking to earn more income from their dividend strategies in 2026, is stock selection and a focus on timing good entries and exits more important than in prior years? And I'm going to throw to Phil for this one.
Yeah, I really think so. I mean, we're coming into an environment since COVID, and I think even more so now in 2025 and in 26, where volatility is a real thing. You know, prices have been very volatile. We've seen earnings seasons, stocks that wouldn't normally jump as much, jumping 20, 30, 40% on the day of earnings. So I think timing is crucially important, especially when we're talking about income, because the general income play for most people is buy and hold.
Well, I was about to say that. It was just like it's buy and hold,
but in an environment where things are swinging so much more, I think having a focus on picking good stocks at the right time to be able to give yourself that buffer to say, okay, well, I've bought it, I'm getting the growth whilst I'm getting the dividend, and you can make a much easier decision in terms of saying I'm going to hold a stock to catch a dividend while I'm in profit, much better than saying I'm going to look for a dividend but I'm down 50%.
So what you're saying is don't look just at the dividend yield. So you're saying look at other metrics in the market to determine whether you should be buying and whether now you should be buying.
Yeah, and especially with the way things have changed over 25, like material stocks are paying great dividends now, and typically they're known as growth stocks. So I think the environment to be picky in terms of stock and sector is more important now than ever.
Yeah, I agree with you. Anyway, the time to reveal the hottest dividend stocks for 2026. Now I'm going to bring Pedro in because we need some sanity here.
Yep.
So what are the stocks?
All right, don't worry. We've got some great ones coming up. So the first one that we have is the mining stock. So like Phil mentioned, mining stocks are paying out great dividends these days. And this is a great example, 23.21%. How's that for yield?
Who is it though?
So this is Stanmore Resources.
Thank
Ticker
you.
code SMR. Well, I was going to bring it up, as a suspense.
I mean,
but,
guys, the standards dropped since I haven't been here. Like, God, geez.
Well, we're going to bring that standard back. You're going to be blown away by this. So let's check out the monthly chart here on the left first. We can see that the stock has found support recently, and this is what we like to see. We like to see a nice support base being established. In this case, it was $1.6, and we've also had a retest of that base. This is what I really like about Stanmore, that we had that initial rise, and that's when the speculation comes in, and it's a little bit more, I would say, dangerous to get in at this time. But we've already had that retest of that level. Now we're shooting back up. So I actually do quite like the prospect of this. And like Phil mentioned, it's all about the timing, because when you get in at the opportune time, not only are you factoring in the growth that you can get, but you're locking in that yield as well, because the higher that you pay for it, obviously the yield is going to be less. So if you can get in at a good time, not only do you lock in your profits, you also lock in your yield. So here on the weekly chart, looking marvelous. I actually quite like it. Higher bases, higher peaks. So this one is ticking all the boxes. More volume coming in here as well. I would just be cautionary that it might, that it's one of these type of moves where we see the stock move up only for it to get sold off. So I would just keep a bit of a stop loss on it. But I mean, the long-term prospects of this looks great.
I'm just thinking in my head, you answered all my questions before I even got to ask them, so thanks very much for that one. But I was going to ask Janine, how sustainable, 23% dividend yield on a stock, how sustainable is that?
It's not. It's something that could be there for 6 months, 12 months or so into the future. And then I would say, given the timing of things right now, that it probably will fall. But we know that it's going to fall anyway. It's not so much the yield that we're talking about going forward. Like Pedro said, it's whatever yield you can get right now.
Yep.
And when they're paying, some stocks will pay once a year, some stocks will pay twice a year. So you've got to be looking at that as well.
All right, good, wise words. Okay, now Phil, I think you've got the next stock, haven't you?
All right, let's have a look. Next, we've got Perpetual. Now, this one is in the financial space. Financials, the growth for 2026 is not anticipated, as we saw there earlier, to be like materials. And I think even so, that sometimes could bode well, because when you're talking about yield and income, there'll be a lot of people out there thinking, well, I want stability. I don't want wild price movement. And when you talk about tech sector and materials, well, you're going to get volatility. But something like Perpetual, when we go to that chart and have a look, although it's been falling and basing out for quite a long while now, I mean, the real important levels for me have been around this $20 mark, where it's proven itself in history to find a real significant base. So we're there now. Volatility has really calmed down. We're starting to see the market move in more of that sidewaysy type fashion. And that might bode well for a bit of a longer term hold on an income type strategy for this one. So I don't mind it. I mean, it's looking quite well. Such an important level at $20. I think you're getting quite a nice deal.
Well, I think on this one being 9.43%, is it?
Yes,
the dividend
absolutely,
yield. I think it's probably a lot more sustainable.
Yes.
But a stock, especially if you're more long term, because it's been falling for such a long time.
Yeah.
So getting in at the right time, this could be a great stock for your super fund and those big sort of blue chip type portfolios.
Absolutely.
Not the one that's going to shoot the lights out, if I can be so bold as saying that. But I do like this stock at the moment.
And if you've got the ability to just add a little bit of a technical nous to it and get in on that exact moment in terms of timing, then you're really going to give yourself a chance with this.
A lot of people don't give that credit, do they? Really, that timing of the entries. And I mean, I don't know how many times I've done presentations and people just go, I just buy and hold, and I go, great, you get average returns, and you get the whole roller coaster. And I was presenting to a group in Maroochydore, and I was telling them that, I said, we're right at the point, and I want to get your views on this, Janine, before we go too far, because these guys are too young to understand what the GFC happened. We lived through that. But I was saying, to me, it feels like right now is like it was in 2006, so to speak, although the economy was better in 2006 than it is today. But I was thinking from a market perspective, we're sort of around 2006, maybe early 2006. I don't know. I want to get your thoughts, Janine.
I reckon it's more like 2005 or 2004, somewhere around that area.
I almost said that too. So, but it's things are setting there, aren't they?
Because we just went into the absolute boom. It accelerated so much into 2006, and then we had that initial correction when there was a few cracks in the financial system, and then it took off again, and then we had the crunch after that. So we could get the same sort of thing happening, but we could also get a number of peaks further apart. But look, I was thinking one thing about the dividends, which is really important. Investors think about buying stocks like banks, but they think about Commonwealth Bank. If stocks like that have been rising so strongly, your yields are going to be so low. But it's really that balance, like Phil was saying before, about volatility and the yield, isn't it?
Yeah, it is, and that's the thing is it's about, and I think what we're seeing now with all the algorithms, AI, all that stuff, things are happening at faster speeds. So I think what took 2 to 3 years to unfold in the GFC is probably going to unfold a lot quicker. I don't know if you guys got anything to say on that one before we move to the next stock.
COVID, the tariff crunch. Those two great examples from recent history. It only takes the algorithm to trigger like a relay effect, and things get sold off real quick.
Yeah, I mean, all I'll add for me, the most important thing right now for investors to watch is that dynamic between leverage, as we often say, where that's at, and who's really driving the market. And I just recently read a report out by the big bank, one of the big central banks, the biggest in the world, coming out and saying right now there is this huge divergence in the fact that it's the retail end of the market driving the equities higher and also driving gold higher. So when you have that level of participation with ETFs at the maximum amount of investment from the retail space, then I think some of those dynamics are creeping in.
They are, and I was only actually saying that on I don't know if the viewers know that I write for Money Magazine every week, but I also on their Friends with Money podcast quite regularly, and I do my stocks for your stocking every year, and I've done that for like the last 3 years. And I was only saying all of that to Tom with Money Magazine and saying, this year so far, small, ordinaries, emerging companies are the two best performing indices. And that's telling me exactly what you're talking about. So it's about understanding what the market's doing and actually timing that entry into the right stocks is really, really good. But if you want to understand the stock market really well, understand what to buy, when to buy it, how to set your stop losses, money management, you name it, it's all in this book, and how to construct your portfolio. It's for free. You've just got to pay the shipping. So it's my first book. The link is in the description below. So really good Christmas present for yourself, but also a really good Christmas present for your loved ones. We've had a lot of people ring up just to get copies for their sons and daughters and other people, because the information in here, you won't get caught in the next crash, which all of us are thinking is going to happen in the next 1 to 2 years. So you need to be prepared for it. But anyway, let's get into the next stock. I'm going to go back to you now, Pedro, and we're going to leave Janine out of the stocks for a while. But let's go.
We'll go back to her with the coal ones later. Now, GWA, this is interesting because this is one that I actually had a student ask me a question about the other day, and he was asking me how to apply price analysis in a sideways market. And I think it's a great question because this is exactly going sideways at the moment. And basically, I mean, it was a long-winded answer, and I gave him some technical actions and how to do it. And it's too long for me to get into it in the show. But basically, it's the same as you would always apply it. And really, I'm just going to highlight these two levels here on GWA. This is by the way, it's a company that's in the construction space. So you can see it's been going sideways since January. It's been consolidating nicely. So really, from that top there, $2.70, to that bottom there at around that $2.20, that would be my kind of two levels, just waiting for it to either break to the upside or the downside. You really can keep this simple. A lot of people like to overcomplicate things. They do. Don't they? You really just keep it simple. If it breaks to the upside, good territory. If it breaks to the downside, then obviously it's going to continue down. So that was my answer, and obviously a little bit longer, and I added in, the technical levels, what we teach in the course as well. So I like it. This one is actually on my watch list as well. I'm keeping a close eye on it because I think that if it does break above that $2.70, I think we could see some very nice growth out of this. And really going back to the dividend yield on this one is paying 9.38. So this is probably why it's accumulating like this. There's probably some big players accumulating getting that yield and just having that yield story. But as technical traders and as retail traders, we can have both. Why not have the growth and the dividend?
But what would you, obviously you said this is in the construction area, was it?
It is, yes.
But it's quite volatile. Like if you look back all over that history of that chart, it really goes up and down over the same range.
It does.
So how would somebody, obviously we have investors and beginner people watching this show, but we also have traders watching this show. So what advice would you give up both of those?
This is a trading stock, not necessarily an investing stock.
Yep.
Because as you mentioned, it is quite volatile. Volatility is your friend when you want to get in and out in a shorter period amount of time.
Yep.
The trending stocks are the ones that you want to keep in your super, that you want to invest in, because you can manage them once a week, once a month even. But these type of stocks, you need to manage them in a shorter time frame. So that would be my advice. If we go back to the chart, that volatility that you can see here, it provides beautiful trading ranges and trading opportunities, both to get in and out, but at a shorter period of time. You don't want to be in this stock from 1996 all the way to now for the price to just be the same. And you would have just been relying on the dividends, which by the way, are not always consistent. There might be some years that maybe they don't pay it out. If they're looking for growth, it really depends on that payout ratio, and that's something important that dividend investors should be looking at, because if they're giving 70% of their earnings as dividends, well, they're not going to have much growth in the company.
Yep.
If they're paying out a lower ratio of dividends, then they're going to be putting that money to grow the company. So you want a little bit of that balance, so then you get both the dividend and the growth of the income.
Now, later on in the show, we're going to talk about drone share, which is a lot of people have talked about over the last year or two. I want to sort an argument out here, because one of the two of you recommended it in a hot stock tip a while back, and I think both of you are putting your hand up saying it was you. Who was it? And do we need Janine's boxing gloves?
It was Phil.
It was Phil.
Yeah, it was.
Thank you.
No worries, no worries. I'm covering it tonight as the next possible hit.
Okay, well, Phil, we've got another stock?
Yeah, we do. Macmillan Shakespeare. Let's go and have a look at that one now. What I like, we haven't mentioned this to date, but one key criteria most investors can do is a simple little checklist when they're looking for yielding stocks. Bring up a chart. Yep. Look where it started and look where it is today. If it's higher than it started throughout time and consistently going higher, well, that gives you an indication of that being a good company. And these are the kinds of companies that you want to hold for that longer period if you are looking for income, while still being relatively safe by getting that capital appreciation. And this one throughout history, yes, it has had periods where it's fallen away, but it's proven in 2025 sitting at all-time highs. So that to me is quite important. It's paying an 8.83% yield, which is very nice. And if we look at this major level, I'll be quite basic with it. $15 for me. As long as it holds above $15, it's got good opportunities to continue that capital appreciation up to that 22. And some of these simple rules, Dale, we keep talking about, and whilst they may appear simple when we do apply them on a chart, it's important to also, put the caveat in there that it's not just as simple as drawing lines. I've said it before, and there's so much more that goes into it in terms of confluences, lining all the different elements up. So please, there are some simple techniques in the book there, but just know that there's a lot that goes on between our ears to get this the way it is. And so from that perspective, when I look at MMS, above $15 is really interesting. And the fact that it's creating these really high long-term bases and highs, I think watching this on your watch list and trying to lock in a nice yield would be one for 2026 for sure.
Look, I agree with it. I actually like the stock. I was just thinking about what Phil was just saying there, but I know, we just scratched the surface. And I want to get your opinion on this, because people watch the show and they go, you do look at charts, but you don't put anything on the charts, or you don't do much technical analysis. But then you see some of the comments where people are just way overcomplicating their trading. And I know from our point of view as experienced traders, we look at some of their comments and think, yeah, you don't really know what you're doing, but you're trying to sound like you know what you're doing, but you're really overcomplicating it.
Or you've misinterpreted what it is.
And that was the other thing, is they misinterpreting what we're actually talking about because they don't have the knowledge. But, talking about what people should be doing and keeping it simple. Janine's the queen of keeping it simple in terms of helping students and people understanding what's going on. What would you suggest people do if they're sitting here going, I'd like to get into this trading, I'd like to know what to do? What was the first thing that you would suggest they do?
The first thing that you need to do is just ask yourself why it's important to you to be able to be good at trading the stock market, and then really reflect on that and how important it is and what it could mean to your life if you had that knowledge and were able to trade with confidence. Would it mean that you wouldn't be working in a full-time role anymore? Would you'd be able to spend more time with family? That's such a common one that people tell me all the time. I have people who are just stressed about their jobs and not sure about the future and don't know how they're going to pay their bills. That's the big one, I think. So to me, it's just first asking that real honest question and saying, well, you know, why do I need this, and how important is this to me? Because if it is, that's an easy answer then as to where to go from there.
It is, and I remember last week they sent me a link to watch a testimonial, I think, that you recorded with a guy called Gary.
Yeah.
That I met at the Microcat conference, one of our graduates, and he said he'd made like $300,000 or $300,000, but that wasn't the exciting part. He said he now goes to the gym every day with his 17-year-old son.
Yes.
And he was a landscaper, and to me, his eyes lit up because now I spend quality time with my son. It wasn't the money was there, and his total peace of mind and security financially is all there, but the biggest thing was now I get to spend time with my son, quality time, and I think that's a really exciting thing for you to do. But if you are somebody that wants to get into trading, we currently do have a special on our diploma courses, thousands of dollars worth of special offer that it does end this week. I think it ends on Thursday or Friday. You need to get in to the course. So if you haven't seen it, pick up the phone straight away and get onto our 1300 858 272 or go to wealthwithin.com.au and register and get the team to have a chat with you about it all. But if you are serious, now is a perfect time to start learning about the stock market and trading so that you can have the lifestyle that people like Gary have. And if you haven't seen Gary's testimonial, I think it's probably on our website somewhere, so you can have a good look at it and see what it's all about. But anyway, well, that wraps up our first round of stocks for tonight, and we've got some more amazing stocks to come just after the Janine's hot topic, which we're going to get into right now.
We are. Now, this one's sure to provide controversy. Will uranium stocks rise in 2026, and should you buy? Dozens of reactors are under construction and more than 100 are on the drawing board worldwide. So if the prospect of increased demand wasn't enough, the US Geological Survey officially reinstated uranium into its 2025 list of critical minerals on November 7, 2025. So not only is the demand coming from existing reactors, planned reactors coming online, rising electricity demand from data centres, there's also the impact of policy shifts, and we've seen the US government providing incentives to mine for uranium. But it's not all smooth sailing. Earlier this year, forecasts indicated a potential oversupply ahead, and we've already seen uranium prices retreat. Now, to those looking to profit from rising prices, are we likely to see higher prices? The short answer is yes. When prices retreat, there's often opportunity, but when prices come back, people lose sight of the opportunity. So watch this space in 2026. Now let's take a look at a couple of stocks. All right.
Okay, so who's going to be first?
I'm just in shock that Janine's picked uranium as a trending topic.
Well, I wondered why it was going to be controversial.
Do you need your Harry Potter stick to change things? Or?
Not quite.
She does. She normally has an argument with Phil and I.
Look, I contemplated having boxing gloves here, you know, just because I've got three of you on the desk right now, and how am I going to, you know, how's that going to happen for me, little old me, just by myself
normally
here?
throwing them at me, not Phil.
But then I couldn't bring all my props, so.
I'm glad.
BHP.
Let's go to BHP.
All right. Did you want?
All right. Now, BHP, you can see on the screen there, we know that BHP's got a decent exposure to uranium. It's one of the big stocks, big miners. So if you're looking for good exposure to that market, BHP's got to be on the list. At the moment, obviously, it's buoyant right now. We've seen BHP rise in the last few months and is looking really nice. It may come under some short-term resistance while it's just settling into this new trend, and then we'll see a challenge of this $50 mark. And as we said on last week's show, I mentioned to you my price where I expect it to go through the all-time high, and I'm not going to mention it now, so if you didn't watch the show last week, you have to go back to it.
Oh, you're mean.
$52.
Just go back and watch the show anyway. Look, but BHP looks really primed. I mean, if we're looking at this long-term potential level of support across here, it's just huge. I mean, that is a long-term support level, which we've seen BHP come back almost to that level and bounce from it. So in Australia, the little fun fact is that we have the biggest global reserves of uranium in our country. Kazakhstan is the world's largest producer, but we obviously are a producer as well, but a lot smaller.
So we have a bigger
potential,
stockpile than anybody else.
Yeah, the known reserves, but the potential is significant as far as uranium goes. So, but the challenge is for the miners and the producers is the costs versus the price of uranium. So
always,
if the price of uranium's going up, then obviously it's going to be better for them. But the price is not that straightforward either, because what we see on the spot price is not necessarily the price that they're willing to pay. So there's actually the long-term, longer-term contracts that actually reflect the more current pricing of uranium. So that's something to bear in mind for those of you who want to do your research in this area. Go and have a look for that information and stay on top of it. There's two other stocks that are worth having a look at the moment. DYL, Deep Yellow, and BMN, which we've talked about both of those on the show. So Deep Yellow's first up, and it's been tracking higher each time we see these rises moving up there. You can see that on the monthly chart. I'll just expand it up for you. Each time it moves up for quite a steady period of time. If we just have a look at how long in time that rise is, it's usually a couple of years moving up, and we've seen the same thing again here. So I'm expecting that the next one will be of the same sort of duration, but there is that short-term supply issue, hanging over the heads of uranium at the moment. So that could be a little bit, but we've seen it pull back significantly. Look at the fall that we've seen in some of these uranium stocks outside of BHP, which is quite strong. Obviously, it's more diversified miner, so it's not as exposed to any shocks in one particular commodity, but we've seen a 40% fall. Now, the best thing to do is go and compare that, and I haven't got this on the screen right now for you, but go and compare what we've seen in history with these stocks and how they've unfolded in the past to what's happening now in terms of looking at that potential. But if uranium goes on another run, which often happens, we see it like an over-tightening tends to be that, you see a fall in the price of a commodity, the market pulls back, people stop looking at it, stocks pull back, and then all of a sudden they start to set up again. Nobody's talking about it. And this is where we bring this sort of information to you, because you need to be watching these things even when they're not loved and being prepared for that. So there's potential upside on Deep Yellow. The other one is Bannerman, what we're looking at as well. So Bannerman's been trawling along this bottom here for some time. It's tried to make a few nice runs out, but it is at a pivotal point right now. So all it takes is for that price to start moving higher and some positive information coming out of Bannerman. And, the sky is almost the limit for Bannerman, given where it's been trading at the moment, but it does need to break through that level to start that new run.
Looks like an exciting sector to watch. Very, very much so. So thank you very much for that. Now, if you want the skills to analyse stocks just like you've seen tonight, you make sure you visit our website, wealthwithin.com.au. As I mentioned earlier, we do have a special offer on our diploma course, so now's the time to get in. But now let's get back to our topic and get back into some more stocks. And I'm going to go to the legend called Pedro over there.
That's right. This one's right up my alley. This is one in the energy space.
I was going to say, I thought you were going to say bowling or something.
Yeah, definitely not bowling. I would not be able to do that. But trading, that's right up my alley, definitely. So monthly chart on the left, let's go to Viva Energy Group. So this has got a dividend yield of 8.03%. This is one that has infrastructure in, they own the Shells and the Shell petrol stations and all of that. So they're in the oil and gas industry. This is textbook, I tell you. This you can't get more technical than this. Basically, we have found support twice at around that $1.50 level, and it's bounced both times. And this is one that IPO'd back in 2018, and it fell as they normally do. Found some support, went on a beautiful run, and look how nice that tends to trend. We've got beautiful troughs that you can just apply a nice momentum there, and you would have been able to get a nice indication that it was about to turn as well. These are the types of stocks that you want to be looking at if you're more of a medium to longer term trader or an investor in that case. And it's all about locking in that yield early and then just riding that trend.
Well, to me, looking at this stock, it gets back to what Phil was saying earlier. It's simple things. Keep it simple and don't make it complex. And this looks really simple, doesn't it?
Yeah.
And to me, I see so many people make so many mistakes trying to trade stocks that are hard to trade, that are volatile, not giving proper signals because they may have read some story or had some friend say, here's my hot tip. But keeping it simple, really, you get better stocks and you obviously get more success. Did you want to say something? Because you're looking at me with one of those eyes.
I'm actually agreeing with him. That's strange. I'm sitting there thinking, geez, those are wise words coming out of your mouth.
Thank you. I can do it every now and then, but I have to. I'm sitting this close to you, so I've got to keep it like that anyway.
Well, I would also add, keeping it simple, that a lot of people think that trading is you sit in front of a screen and you've got all these flashing lights and you just, that's how the TV kind of promotes it. But really, it's not about that. You want to keep it as simple as possible and trade less, and you actually get more profits. And this is a great example of that. You don't want to be sitting at your desk. You want to be having fun with your family, going to the gym with your son. I mean, that sounds great. My son's not old enough for that yet, but we'll train him up when he's about 3 years old.
You do your gym exercises with your son, don't you?
Exactly right. Yeah, nice shoulder exercises. So all of that fun stuff, that's what trading is about. You want to be able to trade so you can have that lifestyle, not make trading your lifestyle.
Oh, a famous person once said that anyway. I remember that. I'm going to go to you for the next stock, Phil.
All right, let's go. The next one is Chorus Limited, I believe. Yep. And another one. I mean, we look at this stock. This is the whole history. We're on the monthly chart. Really beautiful looking stock, continuing to make higher prices. Just broke through to a new all-time high recently. And what I love about this one is that when you look at the way it's done it, and you compare it to some other stocks that we saw in 2024, like the way tech finished, like the way financials finished, there's no signal or sign of any type of blow-off type euphoric move at the moment. In fact, it's really given this really beautiful period of price agreements at around $7. And now forming back, whilst it's taken out the all-time high, there could be, I guess, a little movement back down, which we often see. But the way it's doing it, I mean, we've had 3 months for the sales to get involved, and they've not done much. They've not even been able to take out the buying efforts from March 25. Yeah. So that when you see stocks moving in this type of gradient, healthy buying and healthy selling, we've spoken about it plenty on the show, but no good trend unfolds without healthy buying and healthy selling. If it's only buying, be scared. And right now there's none of that. So it plays in perfectly for a stock that gives you growth whilst also giving you a really nice yield at 8%. And if I just apply a nice little momentum on the way up, we've respected it beautifully. So I think right now we talk about timing. We've spoken about that today.
It looks good.
Timing is good to be watching this.
I was interesting for the stocks. We've done about 6 stocks now, roughly. Only one's been 20%, but you get people, I know you get people saying, oh, I've got this stock and it pays 18%, and they're trying to rank them in order of dividend yield, what they get, and trying to buy the ones that have the highest dividend yield at the time. Whereas what we're showing them is no, that's not necessarily. You want someone who's got a good dividend yield, but the timing is right. And to me, that's important, isn't it, Janine?
Yeah, a lot of these stocks, it's all about the trend, as the guys have shown. So is there a good trend on the stock, and is it setting up for something? And how do you actually know that it's setting up for something? That's where the technical analysis comes in, obviously.
Yeah, sorry, Phil.
I think it's also important, Tad, because it's a very important point you mentioned in the fact that there will be times where companies aren't doing great and they dangle the carrot and offer a really nice yield. And to be just looking at that yield alone can put you in some serious danger of buying a stock that's getting ready to continue to fall.
Yeah, so important, making sure we get the timing right. We're getting stocks moving up and getting into them right. So we got another stock, Pedro?
We sure do. So this one is Rio Tinto. So this one would be known to a lot of people. This is one of the biggest miners on our market, basically 7.03% yield at the moment. That is great for something, for good for Rio, exactly, and a nice safe stock. This is one in the top 20, so it's very liquid, huge market cap. You're buying into a nice quality company, plus getting the yield. I mean, what more could you want? And it looks like it has broken out into a new uptrend. We've had that sideways consolidation for a long period of time now. Since 2021, basically, it's just been going sideways. So, you know, there's been some accumulation happening here, and then now suddenly it's broken out. So the level that I'll highlight there that it's broken out of, it is around that $136 level. We've got a nice close up there. Let's have a look on the weekly what's going on, and it's quite vertical. So we could expect a little bit of a pullback, and we are seeing that this week. You can see this bar here, it's pointing to the downside. So we might come back to this period over here. We can see that there's a lot of price agreement, roughly around that 133 to that 125 level. So it could come back here, consolidate sideways a little bit, or it could actually bounce off that 134 level and then come back up. But you need a nice rule for this one. It's not hard to find one. You know, I've covered this on a Trading Essentials report for our students before. We found multiple trading rules that you could apply on this stock. It's quite predictable if you know what you're doing. And when you catch those trends, I mean, you just stick with it and just let the stock do the rest, right?
Well, you do, but it's, you know, and I can hear people at home going, it's $140. Should I be buying that?
Well, you know, it's funny that you mentioned that. I had an American guy I was talking to, and he's saying, why are Aussie stocks so cheap? Because they're used to, you know, $1,000, $300 stocks, but it's all relatives. You know, if you've got two stocks that are worth $1 million each, or you've got 100,000 stocks that are worth $2 each, or, you know, it's all relative. It doesn't matter the amount of stock that's available. It just matters if it's going up or down. Yep. That's really what we're trying to do. That's how you make the money. It doesn't matter how much the stock is. I mean, Berkshire Hathaway, how much is their stock?
Hundreds of thousands.
Hundreds of thousands just for one share, and it's still going up.
Yeah, and that's what I'll say to people. You know, if you looked at Berkshire Hathaway 10 years ago, you would have gone, oh, it's too expensive. But have a look at the price now. You know, it's all, as you said, it's all relative, but it's people constantly think a small stock is a better buy. Like a stock under $1 is a better buy, and to me it's like, no, these stocks are better buys.
Exactly.
So last one we've got is, Phil?
AOV. Let's go and take a look. Emotive. Now, what's quite interesting with this one, you know, sometimes, Dale, you find a bit of a Goldilocks scenario when you're looking for yield, and that is when a stock is trading at a really nice discounted level, known in history to be a significant level, and paying a great yield. And
this is where you start salivating because all your confluence is
potentially, yes.
better than Christmas cake with King Island cream?
I don't know about that. No. Cake and ice cream, I'm sorry, that's first. But what I'm talking about, which is what's so important for people to see, is 850. 850, which has been a barrier for the stock from 2004 to 2015, is now a base. I mean, we saw it in 2016, 2020, 2022, and now again. So you're getting, if you are looking at this kind of stock, at a really important, proven, discounted price level. But again, that doesn't mean I'm saying to buy. So what I'm getting at is that looking at it at this price is very favourable. If you can add on top some skills in terms of getting it as the confirmation comes, and it's moving in the direction, because right now we've seen really big selling coming out of February. Yes, we've seen some buys pick up. It's at a crucial level, but it needs to do a little bit more for me to say, okay, the tide has turned for the buying side. When you can find that moment, which may come very soon, that would be ideal. And given it's paying a nice 6.5% yield, better than bank interest, I think this is a nice opportunity for 26.
It looks really nice, and it looks like it's something that's easier to trade. Now, before I'm going to, you guys can have a think about what your favourite stock is out of those ones. But before we do that, I want to ask you, Janine, obviously with these sorts of stocks, and Phil alluded to it, people saying, you know, and we see comments, people going, oh, you told me to buy this stock, or you said this stock, or you said, you know, this stock was going to go up and it went down 10 cents today or 1% today, you know. And to me, and yes, you guys just laughed, and I do. We're not trying to be rude to people, but people make some of the silly comments, aren't they, really, showing their lack of knowledge, etc. But we're not actually telling people to buy these stocks today. We're waiting. We keep talking about confirmation, and it's also, if they do go up, then you also need to know where to get out. But I want to get your thoughts and help people understand what we're saying here to people and why they should be watching these stocks.
I guess the way that I could describe it best is I remember when we used to run face-to-face workshops.
Yeah.
And we used to put stocks up on the screen and we'd run through the top 100 stocks. Remember that? That was your whole idea of
before these two,
of framing people and getting them to think big picture, because often the big mistake that people make is that they're thinking too short term.
Yes.
And that's exactly what you're talking about. People have been making those judgments based on short term perceptions about what we've said. But if we look at a chart like some of the ones that we were looking at before, we're looking at the monthly charts mostly, because we're just looking at where the opportunities are, or where a stock looks good, or where we can see a big picture pattern that we know generally unfolds in a certain way after, where the white part of the chart is on the right hand side. So it's as simple as that. We're not saying to buy now, and I think that's what you're right in saying that, because people get stuck on thinking that's the case, but it's not.
Yeah, and while you were saying that, I remembered at the Microcap conference I had the guy was asking me about our courses, and I said, well, don't talk to me, talk to these people. And I walked him over to Gary and a few of the other ladies that were there, and he was talking about sort of smaller stocks and whatever else. And I said, look, our students constantly tell us that they make the most money out of their larger stocks, their bigger portfolio, and the smaller stuff they just trade for a little bit of capital, a bit of income. That's what they do. And then Gary goes, yeah, that's what I do. He said, my big portfolio just makes most of my money and I have a bit of fun with the smaller one. And then one of the ladies said, yeah, I do the same, and she trades full time. And another one said exactly the same thing. And this guy's jaw could have dropped, because these are people that we've taught that are doing exactly what he wants to do, but they're doing it smarter and they're doing it with less effort too, which is the thing. Is like Gary goes to the gym, but he does a lot of other stuff, with his family. Like he said, I maybe spend, maybe 2 hours a day looking at the stocks. I think that was about it. Not very long at all. So really it's about you, and as what you just said, it's about why would you want to do this? But I'm going to go to the guys and get their pick first of their stock, and then I'm going to come to you. So I'm going to give you time to think, Janine. So Pedro, what's your favourite one?
Well, look, I like a good bargain, so I'm going to go for Viva Energy there on the chart. It's looking quite nice. If we pull that up again, that is that one right there. I think it's consolidating nicely, and it's in store for a good run. Okay,
because I'm going to ask you this show next year. Phil?
Yep, I'll be simple. Materials is flying at the moment. Stanmore Resources, 22% yield. I mean, nice little buffer there, and it's looking quite interesting.
My bet is Janine's either going to pick BHP or Rio.
Well, actually, I liked VEA as well with Pedro.
Oh, okay.
But I also was quite interested, and I'm just reaching over to grab the mouse. I also like this, though, if it breaks through all of that noise. Chorus, yeah, but it's really got to prove itself and get going up through that. At the moment, it's still a sideways consolidation, and if it drops below the angle of that trend, leave it alone.
So there you have their stocks that they like. But moving on shortly, we're going to get into our hot stock tip, which looks amazing right now. But first, let's answer your questions. Now, Adam writes, my question is regarding LDX. I've been watching this one closely and thinking of taking a position. It's had 5 months up in a row and there has been some good volumes. It's been rising, but nowhere near as much compared with the volume it's had in the past. What do you guys think of where it could be headed? I'm going to go straight to Pedro.
All right. So that's the other Pedro over here.
The other Pedro over there.
I just went in autopilot mode.
Yeah. That's it. That's all right. We can answer it together.
It's like that old show. I don't know. You probably aren't old enough for that, but there was like this show. This guy goes, "My name's Daryl. That's my other brother, Daryl."
There you go. All right.
So let's go, Daryl.
I'll go first. Right. So Lumos Diagnostics. Look, this one's just coming off a nice base. We've got a lot more volume coming into it. It's had a nice big gap up here in July 2025. That would be my only really concern, that it would come back to fill that gap. But you often find that if these gaps happen on that very low base, then usually the stock will continue up, especially if there's some news coming out or the company's just finally become profitable, because usually you find that The ones that are trailing sideways, they're just waiting for the profits to catch up with the price or vice versa. And there must have been some news that has come out of this one, surely. I like that it's consolidated and come back and retested that low of $16. And now it's come back and it's actually broken above that previous high. So I do quite like that. I would just be putting a nice momentum below it. But in saying that, this may not be the best stock to just put a momentum on. You know, it is quite a low liquid stock, so don't expect it to just be, you know, nice and trending and uniform. This can have some pretty big spikes on the downside and to the upside. So I would just question his knowledge in trading. If you're not such a experienced trader, I would probably stay away from something like this. Leave it, you know, for a little bit later. You can keep it on your watch list, maybe play around with it a little bit, but it is quite dangerous to be trading this if you don't know what you're doing.
Well, I want to get sort of Phil's thought on this because he said he's been watching it closely and thinking about taking a position. So, but he doesn't say how long he's been watching it closely. It's like, is it the last few weeks? But that would imply to me quite a few months, or at least a few months. So what are your thinking on it?
Look, I mean, I quite like what he's doing, I'll be honest. If we go to the chart, there are several reasons for that. Most often that I've seen throughout the year, people that come in with questions like this, they're often asking the question when the stock looks like this, the way in August 22. Sideways or doing absolutely nothing, highly illiquid. He's talking about a stock that has changed character, increased in terms of volatility and liquidity, and is now moving up. They're 3 ticks. So I quite like his view on this particular stock. It all is going to come down to now in the way he structures his trade.
Yeah.
Where does he place his risk? What is his potential target to the upside? They're the two most important things. If his potential target to the upside, which a lot of people do, and we spoke a little bit about it on yesterday's show, is I'm looking at it at 30 cents and my expectation is because it was $1.40 years back, I'm going to hold it to that level. And then you might get tripped up and forget about all the signposts heading to that level as it's going up, which are probably telling you it's time to get out. On the flip side, if his risk is not in the right place, meaning his protection, his stop loss, it might get you out of the stock before you're able to capitalise on the next wave up. And so ironing those two things out, I think, for an opportunity like this where the stock is, because like Pedro said, it is a little more volatile and can be at this space, you get those two things right, and I've got no issue with it. I think it's fine.
I think it's the great contrast between the two answers because they're basically saying the same thing, Adam. They really are, but don't get caught on all the positives that Phil talked about, but not get caught on all the, you know, the protection-y type stuff that Pedro talked about. But they really do. They're both comments balanced at all that, saying, great stock, you're on the right track, but be careful. I think that was the bottom line, wasn't it, guys?
Absolutely.
Yeah, cool. Well, anyway, let's move on. Now, Henry's email is next. He said, I bought Origin Energy on the 9th of May at $11.03. It's just hit an all-time high and I'm still in the stock, but not sure what to do from here as it may still run up from this sideways movement. I would love to know what your thoughts are. Now, I'm going to go to the other Pedro. Phil?
Thank you, Phil. All right, let's go and have a look at Origin Energy. And it's an interesting question for me because when we go to the chart and have a look, he's bought it back here. I'll bring it up on the chart. Bought back in May 2025. Now, the stock's gone up. It is pulling back, and it's pulling back right near his buy price. So I think the timing of this email is quite interesting. Often you see panic start to set in once you've bought a stock, it's gone up, now it's moving back to where you bought. And then you start to think and ask that hard question, do I get rid of it? Do I stay safe? I'm still a little bit in profit, or do I hold? And so I think the most important aspect of any trade is when you get in, before you get in, you really need to have that plan to get out. We see it so much, and I speak to so many people, even friends. I don't know how popular the stock, if you guys are seeing it, but right now in terms of just the stock market and trading, everyone's talking about it, from young to old.
Yeah.
I see it so much with friends that had no idea, tradies that didn't want a bar of the stock market. Now we're saying, hey, what's that thing you do again where you buy and sell shares? But because of that, I think the most important thing is everyone's looking to buy. The sell side is what makes you profitable.
Yeah, absolutely. I know.
And I'm not seeing that, I think, anywhere in that question. I think hopefully if you've got something there set up right now, because the difference is you think about selling and what separates a time to sell from just a pullback that's going to get you going. These are the questions, if someone's watching, if you're asking those questions, then you really do need to think about, hey, should I be getting involved in the market if I can't answer those two questions? And for me, the answer is probably no. But
very good advice.
yeah, that's all I'll say. But I think, look, I think this might be getting ready for another move up because it's in trend. Because I don't want to leave Henry with nothing. Sounds like a nice gentleman, and whilst it's holding on this momentum, I think it's, the trend is your friend. But be mindful of that next time you buy.
Yeah, good idea. Now I'm going to talk with you, Mrs. Santa Claus. I'm not sure what that is, but just letting everybody know this is our last show for the year. We will be back about mid-January for our next show, so we're going to have about a 4-week break. So, thank you for everybody who's been watching the show over this year. But we've had viewers watching for 7 or 8 years, so we've been doing this show. Janine and I, we started with a small little single camera in a little room, in a little dark room, with a lot of dust in it, coughing and trying to do the show. So I'm sure you want to say Merry Christmas to people just as much as I do, don't you?
I do. And look, it's been fantastic working with all of you. And many of you have actually come on to do our courses, so we actually know you by name. And I get the fortune that when you do come through, if you come through our diploma, there's always more training, some to go on to do the advanced, and I work with you directly, and I just love that. But you work with the grassroots people at the trading mentor level, don't you? Right?
Yeah, I do. I deal with the emails with the people just on our most beginners course because I want to make sure they get started the right way, and try and get some of these myths out of the road to get them on the right track and focused on the right thing so that Pedro can then really take them home with the rest of the assessment team. But anyway, we do have more stuff happening. We've got some more stocks, some more emails to go through. But remember, we do have a hot stock tip that is really hot at the moment. But anyway, we're going to get into our next email. It's Jason who's next, and he writes, you guys always have a keen eye on the market, including sector performance and lesser known stocks. So do you have any tips for what is likely to boom in 2026? Whether that is an industry in particular or an up and coming cheap stock like something from the microcap conference you attended. Can I answer this one a little bit?
Please. Yep.
Please. Just give it to Dale. My podcast that I mentioned earlier in the Friends with Money podcast, with Tom from Money Magazine that came out last week, answers all of that because I talked about the sectors, what I thought was going to be hot, what areas in the market that were going to be hot, what happened this year. But I also give about 4 or 5 stocks from the microcap conference that I still like. So go and check that one out. Just go to Money Magazine's website and it'll be there, Friends with Money podcast, or just Google it. You'll be able to find it. As I said, it was out last week. It's called Stocks for Your Stocking. So, but I'm going to now go to, who am I going to go to? Which Pedro am I going to go to? Do you want to handle this one?
Oh, sure. I was just thinking, funny thing about the stocks for your stocking. What you're saying is it's a watch list, isn't it? It's not actually to buy.
Well, yeah, it was not, because obviously we recorded it, like 2 weeks ago. So it's not like the show live. So I've got to try and pick stocks that I think are going to do well in 2026. Not necessarily buy today, but there were some really cool stocks that I looked at in that. And, obviously we've mentioned some of the sectors that I'm talking about as well. So it's a nice... to me, it was a really nice, when I'm talking with Tom, it's a really nice, relaxed podcast because it's aimed at people that are a little bit more investors, a little bit not necessarily traders. But loved it. But you'll get a whole lot of good stocks on here. But we need to answer his question because he's asking, we keep an eye on the market. So any hints and tips from you, Janina, what sectors and stocks that you think could be doing good in?
I think materials definitely.
Yep.
And I think tech, even though it's it's down at the moment, it's had a big sell-off.
Yep.
Any of those sectors that have had big sell-offs, look and trawl through those.
I know Phil mentioned healthcare.
Yeah, but have your criteria. So decide on what your criteria is for your portfolio. Otherwise, there are just so many stocks. You've really got to narrow that down.
Yep.
So if you're a big stock purchaser, then it'll be the top 50 to focus on in any of those sectors, material, like you say, health, some of the industrials, even Telstra, when it could be a good one too down the track again. So there's a lot of stocks to choose from actually.
I know there's a big top 20 stock that all our students are salivating on at the moment, but I won't tell you what that one is. You need to be a student to find that one out. Anyway, now's the time for our hot stock tip for the week. You ready for this one, Pedro?
All
Your
right.
reputation is on the line.
All right, well, yes, it is. I mean,
Can I just say I find it funny that he's chosen the stock I chose at the start of the year that went up hundreds of percent.
exactly.
Just treat it as a compliment.
That's right. I'm having a bit of deja vu.
What do they
here.
say? Imitation is the best form of flattery or something like that.
We're going for the second round here, so let's see if we can make this another winner, right?
He always said, when I grow up, I want to be a Phil.
Oh, that's
Well, let's hope. This one provides the same type of percentage growth as it did earlier this year. And I mean, it's been a hot stock throughout the whole year. The whole military, sector has been hot. We've had EOS, which is one that I actually suggested, so I'll just put that one out. But there's been other stocks in that sector that have been really flying.
We're talking about drone shield, and before you get into the chart of it, I know obviously Phil recommended it, took off like a rocket, and then when it started coming down, people are going, well, you recommended drone shield, and now it's down 10% or 20% or 40%. And it's sort of like, well, why did you recommend it? But that's not what it's about. So I want to get into a little bit about when we talk about a stock, what that actually means. And because you were saying, you do need to have your exit strategy. So just because we say we like this stock, we're not saying it's going to keep going up for 10 years. So I want you to handle that between the two of you, so you can argue between the two of you. But also we need to get to the stock.
All right.
Well, I just think the reality is, on this show we look at stocks, but then we can't follow every stock for every week of the year and follow it, and that's what you kind of need to do, and not kind of, that's what you actually need to do as a trader, is follow price action, keep moving with the market, get the new information and adjust and know when it's time to sell. And so, realistically we cannot do that. So that's why I keep harping on the importance of being able to know when to sell, because that's going to get you in the situation of really cleaning up on a stock like Drone Shield, and then now, as Pedro said, looking for that next opportunity to get a double dip potentially.
All right, Pedro, you're on. Pressure's on.
All right, so notice that we're not looking at this when it's at an all-time high, hot, when everybody's talking about it. We've waited for a nice pullback. Now, the reason why this stock is hot at the moment is actually that they've come out with a new contract in Europe. It's totaling $49.6 million. It's a European end customer. It's a significant proportion of hardware. It's on the shelf, so they're ready to go. They don't need to manufacture it.
Oh, wow.
It's stuff that they've got on the shelf. Deliveries and payments are expected to be completed in the first quarter in 2026. So they're going to realize that profit early next year. So this is what we talk about when the fundamentals and technicals line up. You want to have that confluence of both. You often see these announcements come out, but it may be the wrong time to be looking at it. I think technically this is looking quite nice. I'm going to go straight to the weekly chart here because it's going to show the most action. Right now, we've seen 1, 2, 3, 4, 5, 6, 7 weeks down, a little bit of a consolidation, and then now we're seeing price start to tick up again. Now, a couple of weeks, obviously, like you say, Dale, doesn't make a sheep station, but I think that if we go to the daily chart, I know that we don't usually go to the daily chart. I just wanted to highlight something interesting that's happening here on the daily chart. We are seeing price start to consolidate and then starting to point up. Now, today, the stock is up, I think in the manner of around 14%. So it is around that $2.70. We have broken above that $2.30 level now.
Yep.
I think that it's going to go fill up this gap right here that it created back in November. So that's at around $3.30. I think that that's going to happen. Now, going back to what you were saying, Del, about, we talk about a stock, and then it might go down, it might go up. Well, that's the beauty about being traders, right? We can always change our minds, and that's what people, don't be scared to be wrong. There's no right or wrong. There's either you make the profit or you don't make the profit. That's the only thing. You either trade well or you don't trade well. There's no right or wrong, and you can be, you can change your mind with these type of things. So my mind would be changed, obviously, if it breaks below the $2 level, which I think that, just to round it off around that $2 level, if it does break below it, then we're going to continue down. But the fact that it's broken up, I'd like to see the volume data to really see if this is a nice, clean break. But look, there's other technical things that are happening here that I can't really go into it on this show. But I tell you, the confluence and the data, the fundamentals are all aligning for this one to have another nice run.
Now I'm going to go to the expert on the panel, Janine, because we've lived through quite a lot of these sorts of stocks that have shot off like rockets and then come right back down, and people have got caught on it. So I want to talk to you a bit about some of the buyer psychology or the trading psychology, because we had it with things like A2 milk, which shot up and everybody thought it would do the same thing again the next time it started moving out. We're saying with the buy now, pay later stocks, and there's probably 100 different examples you and me have had over that. What would people who missed out on that last run be thinking, and should they be looking at this stock right now? And those who rode the roller coaster, what should they have been doing? Because let's say they bought in on the run and they've still got it. So what should they be doing right now? And what if you've never traded it before, but you thought, geez, that stock took off like a rocket, what should you be doing? So there's 3 scenarios.
Yeah, so I mean, the ones that missed out, they would have gone on to the next hot thing, because they'll be the type of people who will chase the news, and so they will totally have forgotten this, and when another opportunity comes up, they won't even be there. The ones who are in it they're doing the hope and pray method. So they're just hoping that it's actually going to repeat the past, and we know that stocks do repeat history, but not always to the same degree. So there's another one, and there will be people who, what was the third one?
Those who were in it and have done the roller coaster, those who didn't get in it.
Those who didn't get in it, well, they're probably hoping that, like what Pedro's saying is true, that it's actually going to take off. But they probably haven't learnt the lesson from the first time, and that is that real opportunities come from people who are actually prepared. So whether they're prepared or not, that's the question mark. I mean, if they've come to us, we will prepare you for whatever comes up, whether it's trading these type of stocks or trading big stocks and managing your risk. But there'll be a lot of people that still are not in that position where they're not ready yet.
Yeah, I know about you, but I know I've spoken to a lot of students over the last couple of months, and the number one thing they said to me, Dale, you taught me patience. So if you don't have patience, do our course. You'll learn some patience and you'll trade a lot better. But if you want more from us, check out our video, Australia's cheapest growth stocks to buy for 2026.